watching BNN Bloomberg and our continuing coverage of the COVID-19 fallout. I'm John Ehrlichman. Thanks for being with us on this Friday morning. Well, it's been another eventful day, and we've been talking about the Bank of Canada's decision to make an emergency rate cut. Third time we've seen rates cut overall this month, and a couple of emergency cuts already, and ready to do some big buying in the bond market. We're going to get some more reaction now to this developing story. David Rosenberg is the chief economist and strategist at Rosenberg Research and Associates, and he joins us on the phone line. David, good morning. Thanks, as always, for being with us. What was your reaction to the Bank of Canada action this morning?
Well, obviously surprised, but that's what central banks try to do in this sort of environment, and the Fed's done the same thing, coming in early on and coming in with something that has a lot of heft to it. I guess you could always say, as a Monday morning quarterback, better late than never. But the first, at some point, you're surprised by the action. At the same time, it just shows you, really the scale of the situation here that the central banks globally are dealing with.
These things can get pretty complicated quickly for the average viewer. Yesterday, we were talking about how the head of the U.S. Federal Reserve, Jay Powell, went on NBC's Today Show, which never happens because he wanted to get the message out to Main Street that the Fed's going to be there to try to help businesses and business owners to get through this time when it's hard for them to do any business. But today with the Bank of Canada, we were talking a lot more about the mechanics of things like the commercial paper market, which was described as being effectively frozen. Can you just shed some light, David, on what's been happening in the bond markets of late?
Well, this has been a situation really globally and not just confined to Canada, and ended up affecting the most liquid market in the world, which is the U.S. Treasury market. But what's happened here is that we've had a situation where there's been a tremendous volume of margin calls having to be sold on equities and on credit, corporate credit. And so what has to happen to meet those margin calls is you have to start paving away at your collateral. And so the collateral that's been paving away has been in the government bond market, and that's why that particular market froze up dramatically and forced the Fed into the action that it did earlier this week. So when you have a situation where the most liquid assets become illiquid, that the central banks have to come in with a huge backstop, as they've done over the course of the past number of days.